Ryan Cohen goes all in on the All In podcast, and Budget for Life goes all in, covering Ryan Cohen going all in on the All In podcast. That's right. I woke up at 2:15 of natural causes this morning because I was so excited to cover this interview. I'm excited to get into it. We're going to see what he says and then read between the lines, maybe catch some things that he didn't necessarily say, but he certainly alluded to or implied. What can we glean from Ryan Cohen as it relates to his eBay pursuit? Of course, this interview, not coincidentally, dropped minutes after this press release and the ensuing 8K and Def A 14A that GameStop filed yesterday, confirming and ratifying Ryan Cohen's withdrawal from his performance award, as well as increasing its conviction and clarity related to their desire to issue or approve up to 2.5K or 2.5 billion in share authorization. As you can tell, it is early in the morning, but that's what we're going to get into in this video. I did want to show you briefly that that document so that you could see it here. Of course, you can go on the website to read it yourself, but the whole gist of this is, hey, don't let my comp distract you. My comp was always going to be adjustable related to a purchase of eBay. But just to make it super clear, let's get my compensation out of the way, right? I'll just give up my compensation because I really want eBay. And by the way, if you want to come at me saying that the authorized share amendment is something you have an issue with, well, that's one thing I'm not willing to budge on, right? If I'm GameStop, I need these authorized shares in order to pursue eBay. But for anyone saying that the only reason I'm doing so is to enrich myself, let me make it ultra clear. I will withdraw my performance entirely. 40 chess move from Ryan Cohen. Now, let's get into the podcast here. I did want to say thank you to those who have subscribed. Once we cross 5,000 subs, I will pull a $5,000 Neutronium Power Pack, which is an exciting target if you want to be part of the 5555 Staying Alive Sub Club. Also want to say thanks to those who've joined the channel as fans and friends. 100% of the earnings of this channel go to DRS Book GME shares. And we just locked up 49 additional shares of GME into the float. So together on Budget for Life, we have secured 203 shares of GME. Very exciting. Okay, without further ado, let's get into this interview. Let's see what Ryan Cohen tells us and what he almost tells us. Let's go.
How old we get since you and I last had.
Let's start from the beginning.
Everyone hates GameStop, and it seems like everyone in the media basically wants us to fail and wants them to succeed. And you've got a board that's making hundreds of thousands of dollars a year. They don't buy stock with their own money. They end up showing up to a handful of board meetings, and they're making a fortune. You've got a management team that is grossly overpaid. There's nothing more American than basically risking your own capital. So why does everyone want us to fail?
I'm going all in.
AppLovin started with an $8 domain and no VC funding. They built anyway and became one of the largest ad platforms in the world. Now they're bringing that same engine to e-commerce through AppLovin Ads.
Okay, let's get past this. AppLovin ad read. What a name. What a name. So this is my live reaction. I have not watched this interview before. I don't know what he's going to say, but I do know that at some point I saw the headline that he will say he's going to buy 500 million shares.
An interview. Thanks for being here.
Thank you for having me.
I think it's been like a decade.
$500 million worth.
It's crazy how old we get since you and I last had dinner in New York. This was before several chapters of your life unfolded. And it's great to be talking with you today. You're doing something really interesting right now, trying to acquire and run eBay, which obviously is a big story right now that takes us back 25, 30 years to the start of the internet. But I want to talk a little bit about your story first, if that's okay. And I'd love for folks that are watching this or listening to this to learn a little bit about you and the journey you've been on that brings you to this moment. Maybe we can go back to the business you started, Chewy, if that's okay.
Yes, definitely.
Yeah, well, maybe tell me why you started Chewy. How'd you get that idea, and how'd you get into building this business from where you were coming from at that time?
We were um, wanted to build something online, and we were about to launch an online jewelry website. Did not
Nice,
know anything about jewelry.
nice touch with the Minecraft background, interviewing Ryan Cohen. He probably always has that background, but I'm just saying it kind of fits well. And it's interesting this guy that it's interviewing him has some type of relationship with Cohen, not necessarily a close one, but he's known Cohen pre GameStop. It sounds like before Cohen became the meme stock king, he already respected and has had conversations with Cohen in person. So will be interesting to see how this interview goes.
Went to a bunch of trade shows, bought hundreds of thousands of dollars worth of inventory, built the website, had the distribution, and then I was shopping in a neighborhood pet store. I had a poodle, and I was going every few weeks, and it just hit me on one of my trips that I understood the product much better. It was a recurring revenue purchase. The market was still fragmented. The fact that there were still neighborhood pet stores at the time and they had not been disrupted by Petco and PetSmart was fascinating to me. And then you had Amazon, which was established and had pet products since the 90s, but they hadn't really achieved real scale in the category. So the vision was to replicate the same experience that I had at the neighborhood pet store, but do it online and do it at scale. And I looked at Amazon's best practices when it came to supply chain. So fast shipping, having a great selection, being competitively priced, and then the experience at the neighborhood pet store of knowing the products really well. And it was easy to be passionate about the pet category because I'm a pet owner and everyone we hired were pet owners. And it was all about market leadership. It was a low margin business. Hindsight, not necessarily the best idea to go head to head against Amazon, selling 30-pound bags of pet food, but we executed really well and we grew really quickly and we had negative working capital. And so it was a business that was able to get billions of dollars in revenue and not consume a lot of capital.
How did you?
Two super interesting takeaways there. First of all, Ryan Cohen's genius that everyone and honest tenacity really that every single person they hired at Chewy was a pet owner. Like that's like maniacal. That's insane in terms of iterating as much as possible to create as powerful of a company as possible or as impactful of a brand as possible. Really awesome the length that Ryan Cohen goes to delight the customer to make sure that the business is delighting the customer. A more strategic insight though from what he just said, part of his revelation with going to start Chewy was the prevalence of mom and pop pet stores. He said, how have they not been disrupted yet? How are they able to compete? Why is there not a nationalized version of this, an online, omni-channel, streamlined version of this that would probably make the economics of the mom and pop store uh like undesirable? It's interesting as it relates to GameStop because two of the two primary spaces that GameStop competes in, this is absolutely true. One of them being the video game market, right? There are plenty of gaming mom and pop stores, like mom and pop related game stores. They're everywhere. And there are plenty of mom and pop related collectibles stores and even buy, sell, and trade collectibles type stores, right? The card shop, the game shop, even the buy sell shop, all of those have mom and pop expressions in every city in America, and none of them have a nationalized retail omni-channel efficient presence outside of GameStop, right? Why did Ryan Cohen want to buy GameStop? Well, one of the reasons is the the market obviously was not saturated. GameStop obviously had not efficiently cornered its portion of the gaming enthusiast, collectibles, buy sell trade. They had not done what they should have been able to do as the national retailer for those categories because mom and pop stores were still everywhere. And so, interesting to see him identify that as a signal for opportunity in business.
Learn to execute well. So at the time, you had little business experience prior to that. How did you learn those skills? What were the principles and the values that made you excellent at operating that business?
I understood from the beginning that the real competition was always Amazon, and they were world class when it comes to supply chain. So negotiating very fiercely with suppliers to get the best product costs, and that meant getting to scale and going from buying pallets of dog food to truckloads of dog food, and moving from distribution to direct, and buying generally, the more you buy, the lower the prices are going to be. Operating efficiently in the warehouses. And so labor optimization, warehouse management optimization, getting competitive prices with shipping carriers. It was a game of pennies. And the goal was to grow quickly and establish market leadership. And the difference between failure and success was, pennies in the red is failure, and pennies in the black is success. So we had to operate hyper efficiently, and there was a lot of competition in the space. It wasn't a novel idea. It was going head to head against Amazon, and pets.com was in the backdrop. So it made it very difficult to raise capital, but I'd say at a high level, the market underestimated not the size of the addressable market, but our execution.
As a customer,
pennies. Again, the maniacal level of leadership of Ryan Cohen. What is the differentiator? How did he succeed? On one front, he saw the total addressable market. Part of the reason why he recognized that the market was unsaturated was the existence of inefficiently run mom and pop stores. How did he recreate the mom and pop store experience and improve upon it? Hiring every single person as a pet owner and fighting for every single penny that the company's making, knowing that pennies in the red or in the green would be the difference between billions and billions of dollars of value ultimately created for shareholders. I mean, it's absolutely insane to think about, particularly, again, when you juxtapose that or use that as a reference point as to how he went into and what he's done with GameStop. Say, man, improving on gross margins in GME at from 20% to now 40% gross margins. I mean, it started as a penny here, a penny there, a penny there, as it relates to the ad spend that they were getting out of, the software relationships they were getting out of, the head count that they were getting out of, the store count they're getting out of, right? He's fought for every penny again and again. And he said this in a different interview that he thinks about what would I do if it was just one store? It's almost impossible to find a CEO with that grand of a vision as Ryan Cohen, with that level of attention to detail to every single building block that is going to make that grand vision possible. The detailed nature of Ryan Cohen's leadership is really impressive.
I've had lots of dogs. It was always such a great consumer experience. Did you personally put your finger on that, or did you bring great people around you that understood consumer? Apart from the supply chain optimization, the labor optimization, getting the cash flows to work right, was there a lot on the consumer product angle that you spent time on with that business?
When we looked at the cohorts, you could see the customers were very sticky. And the I looked at it. The reason why I moved from jewelry to pet food was because it was a recurring item. So I love the fact that it was consumable. And when we started Chewy for the first few years, we just focused on food, treats, litter, all of the things that people are buying all the time. So the vision and the idea was if we treat our customers well, they're going to continue shopping with us. And that's what we did. And so it was everything from the handwritten holiday cards to the pet portraits to 24/7 customer service. And if there was ever an issue, we took care of the customer. And that's what happened. And the customers continued shopping with us. And the best referrals are word of mouth. And pet owners love to tell their friends and fellow pet owners if they have a great experience. So the thesis ultimately played out.
And by the way, in a bit of poetic justice, Ryan Cohen now gets to expose himself to the jewelry industry that he was interested in before he even built Chewy via one of the largest gross volume jewelers in America. It's named eBay.
So, for those who don't know, you built and sold the business in 2017 for $3.35 billion. Subsequently, there was an IPO, and that business continued to trade up in value. So, you clearly executed well. But help me understand, how did you build and manage the leadership team, the management team, and the people around you to execute so well? What did you learn as a manager, as a CEO, as an operator when you were building Chewy?
Staying on top of everything. Just it's 24/7, watching all of the numbers. I mean, I would stay in Google AdWords till 4 or 5 in the morning, managing campaigns myself. I was negotiating directly with all of our major suppliers. I had a supplier that told me during one of our negotiations, actually, said it was like a 1 year contract. And he's like, I'm so happy this is over. I never have to talk to you it was basically another year. He's like, I don't have to speak to you for the next year. I was like, that was a compliment. And anytime someone else was doing the negotiation, I mean, it's counterintuitive. They want to build relationships with suppliers. The reality is it's mostly transactional. And so if our suppliers are sending us gifts in the mail, that's a really bad sign. It means we're overpaying. If our suppliers are telling us they never want to speak to us again, it means we're getting the right price. But getting people into that framework is not easy because the path of least resistance is basically to get along and to be nice. But unfortunately, when you're building a business and you're losing money, you got to focus on sustainability. So just being on top of everything.
Absolute savage. That's crazy. Running the ads himself till 5 in the morning, negotiating the contracts with suppliers himself in an absolute cutthroat way. I mean, it's crazy. You thought maybe Cohen got so savage post, multi-billionaire level success. You think about the head count that he's reduced, the store count he's reduced at GameStop, and how many people he's had to fire. You thought maybe he got those gonads over time, but he had that in the process of building Chewy.
And what about on people? I'm just trying to understand your skill as a manager of people, because clearly you did something right. You continue to execute at GameStop, which we'll get to in a minute. And I'm trying to understand, how do you find great people and how do you hold people accountable? And what are management techniques that you've developed for building a team and running a team?
I look for will over skill. And I had a woman that was running customer service, as an example, and she came from, she was working in like an old people's home, and she applied for the job many times, and we didn't think she was qualified, and we looked over her resume, and she kept on applying. She was relentless. So on paper, she didn't necessarily have the right experience, but she had drive. She was motivated. She wanted to work, and she ended up being incredible. So, I mean, it was in general, it was finding people that are diehards that are just willing to put everything in, go all in, no pun intended, and basically be as psychotic as me. And that was the team that we put together. It was just a bunch of fellow psychopaths.
And psychopaths attract psychopaths, and the engine is running at that point.
Exactly. Exactly.
Yeah. A's only put up with A's.
Exactly.
Yeah. And do you regret selling Chewy when you did? Because I mean, it went public at like what 20 billion market cap, like 2 years later. I mean,
yeah, as soon as I sold it, it just
yeah,
it took
yeah.
off.
Like it's,
That was interesting, his facial reaction to that question. Like, and then he starts laughing about how much more money he could have made. Like, you could tell he's like, I could have timed that a little bit better, but we'll see what he says.
like, were you a liability? No, I'm like, what happened?
Well,
Like,
I mean,
yeah.
you know, typical if you talk to the investment bankers, there we're like, you know, we're getting an amazing price, and then all of a sudden it goes public, and there's basically a lot more than what anyone had guessed. So nobody has a crystal ball. Chewy was my baby. I put a lot of, I love that business, and so yeah, and everything works out for a reason in life, one way or another.
Wow, that was actually really insightful. So, one of our first between the lines moments. I mean, you don't have to read that hard into it, but you could tell from his facial reaction from the way that as soon as the question was asked, when he kind of leans back and looks up like this, and then laughing about how much more money he could have made, talking about no one has a crystal ball. I couldn't have known, right? He's almost like talking himself through why he shouldn't feel regret. I'm not saying he wishes that he still owned Chewy, but some of that sentiment there of, Chewy was my baby, etc. And then just falling back on, hey, everything happens for a reason. Obviously, he's better off in life now than he was, right? He's found more path to create more wealth for himself and shareholders, etc. But very interesting that, yeah, if he could go back, he would have at least held on to Chewy longer. And it sounds to me like he would have went ahead and IPO'd himself and then maybe hired a high quality CEO to run it. Like I think he would have rather led it through its next leg. Obviously, hindsight's 2020, so that's why he's not beating himself up about it. But it's interesting to think about his vision now with GameStop, now pursuing an eBay acquisition. Part of Ryan Cohen's like, man, it would be even better than owning GameStop and eBay, owning Chewy and GameStop and eBay, right? Like his vision is a Berkshire Hathaway vision. What does that mean? He wants a portfolio of companies. He wants to own many companies. And if he could still own Chewy, and for that to be the first leg in the conglomerate that he's assimilating, he'd be further along the path now than he is right now. Um, and GameStop could have still been his next purchase, etc. But also, I think emotionally, he needed the time off. He was a little burnt out. He thought maybe he wants to retire, take a break. He's already a billionaire. He already made it, right? So again, it's not that he deeply, deeply regrets his decision, but man, I mean, just think about if GameStop right now was GameStop plus Chewy, right? And if the eBay acquisition was eBay plus Chewy plus GameStop, right? How much quicker could the GameStop turnaround have happened? How much more aggressive would the shorts closing have had to have been if GameStop was getting bought out and rolled into Chewy, right? If the hostile takeover was into a larger conglomerate, it's pretty exciting to think about, but of course it's not reality. Interesting though, again, the takeaways. This is impressionable. This is deeply meaningful to Cohen, and it sounds like so much so that it's not a mistake he wants to make again. So some people have made a lot of Ryan Cohen's comments basically admiring eBay more than GameStop. Does he even want to own GameStop, etc.? Again, like Chewy was his baby. as he just said, and he has said in previous interviews that he wants eBay to be his baby, right? Was GameStop ever his baby? I don't know, but regardless, it has taken a lot out of him to build the value that he's built. And I think the lesson he learned from Chewy is I don't want to sell that value. I would rather continue to bet on myself. Again, no crystal ball, no guarantees that it'll all work out perfectly, but I would rather continue to grow and roll the value I've created into more and more opportunities to create value than to cash out. Awesome for him to have that clarity. Super bullish if you're a GameStop investor that your CEO has that clarity. He's not looking for a second, bigger, more lavish retirement. He tried it a few months later. He's like, okay, great. I'm going to work the rest of my life. And so now we get to have that version of Ryan Cohen, not the Cohen that's looking for an exit, but the Cohen that's saying, hey, I'll continue working without any compensation whatsoever.
Yeah.
And we wouldn't be having this conversation if I was still running Chewy. So, or at
Yeah.
least maybe we would, but it would be about dog
We
food
might be.
instead of something.
We'd be talking about how you built a $100 billion market cap dog food company. But
exactly.
So after you sold it, you kind of became a pretty active investor. Is that a fair statement about the next chapter for you?
I went activist for the first time. Yeah, that's an accurate statement.
Well, you were like a pretty active, like just general, like you would buy and hold concentrated positions in stocks. Is that fair at that
Yeah.
stage? How did you pick companies? So what do you look for and how did you make the investments you made? Maybe you can walk us through a couple of the stories.
Yeah, I'm really excited to see what Cohen says here because I am a financial advisor. I own my own advisory practice. I make a living picking companies for clients, basically. So, in managing their risk, financial planning, etc. Maybe I'll learn a little something from Cohen here.
Of what you went through at that stage.
I looked for established businesses that have a strong historical track record of making money and typically are out of favor when it comes to passive or activist kind of investments. And so that's been my general framework.
Why
Diamond in the rough.
did you choose to go activist when you kind of started making these? Were you getting frustrated in conversations with management, decided to take it public, or was there a model that you were kind of going after where you saw others have success with publicly calling out issues in businesses and driving change?
Well, when it came to GameStop, originally it was a passive investment and I owned under 5%. And the CEO actually reached out to me because they were fighting an activist and they wanted me to join the board. They thought I was basically going to be their friend. They're like, oh, this guy owns a few percent of the company and let's give him a board seat and he'll help us basically fend off this activist. And so they kind of put the idea in my head.
This is around 2020, right?
It was, yes, exactly.
Wow.
So I wasn't in a place. My father had just died recently and they offered me a single board seat. And I'm like, if I'm going to do this, I looked at the board and they had a really large board and they're offering me a single board seat and it just wasn't attractive. And then, COVID, things got a lot worse. They were deemed a non-essential store, basically like kind of on the verge of bankruptcy. The stock traded down significantly. And then I continued accumulating. I ended up going above 5%. At that point, I needed to decide, am I going to file a G or a D? A 13G is basically if you want to be passive, which means you're not going to engage with the management team at all. And a D is where you are going to engage with them. So that was an easy decision once I crossed over 5%. And I remember actually getting a call from the CEO of GameStop at the time. And he's like, yeah, we were discussing me going above 5% and filing the required SEC forms. And he's like, did you file a D or a G? And I'm like, a D. And a D obviously is, it's intended that you're going to be activist. Even though it doesn't necessarily mean you need to be hostile, it just means you're going to engage with the management team. So anyway, Basically, that was what happened.
But going back to GameStop, how did you first identify GameStop? Because the kind of storyline is, hey, Wall Street bet.
Hilarious, by the way, Ryan Cohen smirking at the invitation from GameStop to join the board, them thinking that he will save them from activist investors and basically, hey, we can make Ryan Cohen the bag holder, right? Let's just give him a board seat and we can continue to bankrupt this company, right? Because management was obviously corrupt at GameStop at the time. We've talked about it on our channel and shown the numbers that prove as much, but it's just funny Ryan Cohen saying, "Yeah, it's I don't know if I'm the guy you're looking for. I'm not going to be holding any bags, but I might just take over the whole thing. Thanks for planting that seed, GameStop."
Let's put something on the internet and everyone starts paying attention to it and becomes a meme stock. Was there fundamental unrealized value you saw? Because you seem to be a real kind of unrealized value investor is how I would kind of describe. Tell me if you disagree, that there's real value in an organization that's not being realized its potential. What did you see in GameStop? How did you first identify it and get involved and start accumulating?
I found it fascinating that everybody was like, for whatever reason, and still to this day, everybody hates like the mainstream media, the general consensus has been that GameStop is going to be was going out of business like a long time ago, right? Like 15 years ago. This thing was basically shorted to oblivion, and everyone was betting against it, and everyone's basically just hated it. It's one of those things where when you even say GameStop, everyone's like, ugh, like really? You're an investor in GameStop?
As a financial advisor, I can absolutely agree. It does not help my credibility that I'm fundamentally incredibly bullish on GameStop because people do have this super strong negative stigma, even people that have nothing to do with the meme era of 2021. Like everyone just people that don't know anything about any company. They aren't stock people at all. They know GameStop's a horrible investment and that's a horrible company. Like how did the reputation of GameStop get that culturally saturated in a negative way? I don't even know. It's crazy.
So that's always
Again, that precedes 2021. Like, but has continued even post their transformation. Like it's agnostic to the reality of the business whatsoever.
for as long as I remember, that's basically been the reputation is like the underdog. Everyone loves to take the other side of the trade or bet against it. And so I like that. Like I like the idea of going into a situation where you're basically running into a burning house. And I originally did it as an investor because typically that's where
Truly a psychopath. Oh, good. Let's run into a burning house. Jeez.
you see opportunities is when there's a lot of pessimism and fear. And then, I ended up basically not necessarily intentionally joining the board and then ultimately being the CEO. But that wasn't the original plan. The original plan was basically to be a passive investor. And then I basically ended up it's like there was no one else to do the job. So someone needs to do it. And here we are today.
Was there a thesis on value realization, or was it just about the market had the value wrong? Did you think at the time there was operational changes that could drive more value? Or was it just like, hey, everyone's got this shorted, everyone's got this to the wrong side?
The original thesis was that there's an upcoming console cycle and that they're probably going to survive until the upcoming console cycle and the new PlayStation and Microsoft Xbox comes out. And it was a very cyclical business. And GameStop typically does very well in the beginning of the console cycle when the market is very, very tight and people are basically running a GameStop to buy hardware and software. And so that was the original thesis. And then as I got pulled in, obviously the business is completely different and the thesis has changed. But that's where I started as a passive investor.
That was really insightful. That question, he's basically saying, and he basically asked it a second time because he asked it the first time and Cohen didn't really directly answer, which is, like, why did you pick GameStop fundamentally? Is there anything that you saw that was unrealized value in GameStop's business? Or were you just being contrarian, knowing that the short interest was super high? Like, were you just trying to squeeze the stock because you knew it would squeeze, right? Because it was over shorted, or did you actually believe in the business? And the second time, right, that question's answered, he gives an answer, which is, hey, it might go bankrupt, but it probably won't go bankrupt quite yet. Like it'll probably make it to the console cycle, and if it can make it to the console cycle, it can probably make it an extra 2 or 3 years in addition to that. So Ryan Cohen basically was swing trading GameStop, saying, hey, this is being priced as if it's going to go bankrupt in the next 6 months, but it's probably not going to go bankrupt for like 36 months, which means that I have an opportunity to buy some and sell for a profit. Like that's pretty much what he was thinking. But obviously as the price got lower and lower, he kept buying more and more, believing in the opportunity of this swing trade, right? Knowing that hey, the bankruptcy is not that imminent. It's not you're not going to succeed in bankrupting GameStop before this console cycle. And so I'm going to keep adding my concentration. Eventually, his concentration got large enough that the opportunity kind of presented itself, and obviously the rest is history. But it is, heavily impacted by the short interest that was out there, right? He was not. I don't think he was expecting GameStop to be a long-term hold. There's nothing that I heard him say that indicated as much, right? It was a swing trade that had some fundamental, opportunistic insight, but it wasn't really a fundamental underappreciation of GameStop's value. It was just a mispricing of the timing of GameStop's demise. In other words, Ryan Cohen got in on a technicals play, right? Again, reading between the lines, it was a technicals play, and it turned into a fundamentals play and a long term hold once he became the active manager of it.
So then they ask you to join the board, but you make the point, hey, if I'm going to be involved, I need to have more board seats. Is that kind of how the evolution
Yeah,
happened?
they thought I was
Got more
basically just going to join the board and be a patsy.
right. And then you
I was like,
said,
you probably
here's,
picked the wrong guy to think that that was going to be the case.
all right. So then you went public with your views. Is that
Yeah.
right? And you
Yeah.
kind of, so I think it was 2021, like early 2021, you joined the board with two other executives from Chewy, two friends of yours or two colleagues of yours. Is that right?
Exactly.
And then the stock took off and all of the hedge funds that were short had to cover and the stock price just ripped.
Exactly.
And this is the whole story. So then in 2021, the company raises $1.7 billion, wipes out all the debt. And what was the plan at that point in the business?
Can you imagine, by the way, Ryan Cohen calling his couple friends? He's like, okay, guys, here's the deal. Uh, come to GameStop, okay? And they're like, what? Like I thought you were just building a position to trade it just like everything else, right? He's like, no, here's the thing. I got myself into a situation, okay? And so it turns out I'm gonna be taking over this company. So I know it's not what you thought you'd be doing. Next time I called you, right? We did Chewy, but hey, just remember how unlikely Chewy was at the very beginning, okay? Now go ahead and come on over. I got a job for you over here.
Cycle? Was there an investment operating plan that you were trying to get the team to execute against?
The original plan, I learned a lot at GameStop. I went in and I had this bias from Chewy, which is basically like everything that I learned at Chewy, I was going to apply to GameStop. And it took me about, I don't know, maybe just over a year to realize that was really, really stupid. But I ended up hiring a bunch of e-commerce people from Chewy and Amazon, and I wasn't the CEO. I hired a CEO, so I didn't have day-to-day visibility on what was going on. But the strategy was to make GameStop more like Chewy, and that was the wrong strategy. And once I became the CEO, I quickly adjusted because I just frankly I looked at the financials and saw it didn't make any sense. And then it was, went into maniacal cost cutting mode, efficiency, basically focusing on what GameStop is really good at, which is the pre-owned side of things, and focused on running the retail business very, very well. And then ultimately that led us to the category of collectibles, which today the business is a leader in the collectibles category, and software makes up a very small percent of the business. But there were a lot of learnings on the way. And you look at basically Chewy and GameStop, and you say, well, they're both retailers. You take the same playbook, but that was not the case. Totally different animal. And, one is you've got repeat purchases and you've got these really sticky cohorts. And, we can never overbuy inventory, for instance, at Chewy, because we would end up ultimately selling it. The revenues were growing and we turned the inventory very quickly, whereas we ended up buying all kinds of inventory at GameStop and ended up having a bunch of TVs and inventory that ends up getting stuck in the stores. And if you don't sell it, you end up basically taking down, losing a lot of money and marking it down. So a lot of learnings along the way for me to understand physical retail, which when I joined the board, when I became CEO, I had zero physical retail experience. So
It's pretty funny that he's like, no problem, we'll just turn this into an online juggernaut. Like that's his big idea, right? That's what he's telling his friends. When he's calling them up, like we're gonna build Chewy all over again. It's just gonna be video games, yada yada. And a year into his active role, uh, with Matt Furlong as CEO, like a year in, he's like, gosh dang it, we're gonna have to be a store. Like I'm gonna have to actually learn a new trick. Golly, that's not what I wanted. But now obviously he's better off for it, and GameStop, of course, is much better off for it. But it's an animal he wasn't hoping to tame. It's one he was just wanting to wind down and pivot into an e-commerce giant, and realizing that physical retail has different strengths and weaknesses, and learning that business um, was a challenge that he was already in too deep by the time he realized he was going to need to learn it. And obviously, I'm thankful he did.
Did you think a lot about here are the different categories we could leverage this game?
Also, by the way, collectibles and pre-owned. That's what GameStop is focused on, and that's what we've covered here.
GameStop network, the stores, the consumer into besides collectibles? How did you kind of pick the expansion into collectibles versus any other sort of used category you might be able to kind of move into?
We were already in the category. We weren't deep in the category. And we did try a few different other things within consumer electronics that just really didn't end up taking off like collectibles did. And, if you look at TCG in particular, but now we're growing in sports as well, has been very, very, very popular. So we tried a few different things, and the trade-in model especially worked really well, where like today you could basically bring in you can bring in a graded PSA card 8 and above, and we will give you cash on the spot. We buy back the card, and then we either sell it in the store or we bring it back to our warehouses and we sell it online. So that was very similar to the trade-in model that we had on both hardware and software, and it was very extendable to the trading cards category as well.
And much easier to price.
As you made this change, did you have to change the team a lot, management team? I mean, what was the turnover like after you became CEO at the leadership level and then below the leadership level?
It was identifying the talent at the company and basically having them working directly with them. Like the people who know GameStop the best have been the people that have been there for a long time. And me working closely with them ended up working really well.
You brought in others, obviously, as well to complement them.
Yeah, some. But I mean, generally, working with the people that have been there that know the business really well.
That's really interesting to hear. The people he brought in from Chewy, the hires from Amazon, or I think one from Facebook, like all the big wigs that were supposed to be the big impact people to fix the business that was so broken, they weren't actually the needle movers. The difference was get the complicit management out of the way of GameStop and promote the people that are actually trying to run the company well, that understand it well, like the experts of GameStop that were historical long-term employees of GameStop have been the most helpful managers and executives to turn around GameStop. Even right, this laughing stock of a company, right? The talent was there, the expertise was there, um, and Ryan Cohen's just able to get more out of them.
Yeah. Some folks who have managed multiple businesses or been CEO and applied their skills to different business lines. You know, I interviewed this guy, Charles Koch, a few weeks ago from Koch Industries. He's got a whole set of principles that he tries to apply to running a business. And those principles he's used to build and acquire and operate multiple different kinds of businesses. And he transforms the business by applying his principles to how he runs them. Do you have a similar sort of framework or model or machine that you use for running the business, assessing what's working and what's not working, that you then bring to bear on GameStop, on Chewy, and maybe next on eBay that you've used repeatedly that works well for you? Or is everything kind of truly Zen mind, beginner's mind, first principles approach to thinking about the business?
I'm sure I do, but I'm not good at articulating it. So I don't know if I'm the right person to be able to say what's going through my brain.
That was basically Ryan Cohen saying, look, if you want me to be a management consultant, sorry, you got the wrong guy. Like, I'm not going to make a PowerPoint. I'm not going to have 10 tips for business leadership. Like, the proof is in the pudding. I'm just going to work. I'm going to create value. And we'll see one day if I let you know what I'm up to, but I'm also not going to give away any of my secrets.
Sometimes like whatever I'm feeling, I can't even necessarily describe it. And if I describe it, it ends up being wrong. So someone else could probably do a better job at answering that question than me.
What do you think someone else that's worked for you repeatedly would say it's like to work with you?
You'd have to ask them.
Okay.
Wow. It's still a non-answer. That's funny.
So
Hopefully
let's go
not
through the
good things. Hopefully not good things.
There you go. The psychopathic, intense level work ethic culture, right? We're not here for work-life balance. We're here to work to the bone, to the grave. So that's what it's like to work for me.
Yeah, the pressure is on.
I'm going all in.
Ooh. Little
As the
dance
global
party.
economy becomes more connected, trust becomes the most valuable asset in the system.
Oh, it's not a
NASDAQ
dance
analyzes one.
party. It's not a dance party. It's another ad read. You punked me again, all in.
The numbers speak for themselves in terms of what you've delivered at GameStop. I think collectibles is now 42% of revenue, $350 million. In Q1, revenue was $835 million. You grew at 14% year over year. You cut SG&A from 228 to 202. You have $9.7 billion in cash, $333 million in free cash flow, and the board's just authorized a share repurchase. So it's pretty tremendous how you've operated this business. So help me understand a little bit as you're building GameStop, operating it and executing. What makes you lift your head up and say, "Hey, we should be doing acquisitions and looking at other things"? instead of just building everything organically in-house.
If you look at the size of the business that I can build organically with GameStop, it's nice, it's okay, but I like to do big things. And, Chewy is a good example. It could have been a $500 million business. It could have been a $100 million business. It could have been profitable if we would have spent a lot less money on marketing. But life is too short to do it small. So we have if you look at how complementary, and as we've gone into the collectible space, I've come to appreciate eBay differently. And if you look at how complementary these two businesses in from a lot of different dimensions, the secondary market side of the business, the collectible side of the business, the ability to provide liquidity to consumers, what we're doing in stores, eBay is doing online, authentication of secondhand items. There's so many aspects of the business that are similar, except that eBay is global and has significant scale. And frankly, it's a business that I understand a lot better than physical retail, because I know a thing or two about e-commerce, and it's an area where, frankly, I'm much more comfortable operating. And so when you look at how much the businesses together make sense, and then you look at the fact that it's within my circle of competence, it's all, I can't stop thinking about it. So I look at Chewy as like, Chewy in hindsight, we had a lot of competition in the pet space that were really well funded and they were decent operators, and they didn't end up making it because, it was a low margin business going head to head against Amazon. And it's similar to like the airline industry, where people don't really care about the actual airline they're flying. They're just basically shopping by price. So
yeah,
that was selling pet food online. Not a great idea. And, GameStop, I don't think was such a good idea either. This is actually a really good idea, whether it ends up working out or not, but this is actually a really good idea. We'll see what happens. So.
There he goes. We'll see what happens. So he asks, hey, why do you want to buy eBay? Why don't you just grow organically? Ryan Cohen's like, because I want to make more money, duh. Like I want to run as big of a business as possible. I want to make as much money as possible. Not just him personally, right? He doesn't even get any direct compensation yet from any of this. He's just, as a business purist, right? As a true maniacal psychopath in the world of capitalism, like he just wants to push it to the limit. And why would he not? Especially if he feels like, man, this is a opportunity that's far more attractive than any of the opportunities I've done so far. If I have a similar impact relative to the size of the opportunity I'm getting into, well, you're really talking about well in excess of $100 billion company, right? You're talking about a multi $100 billion company of what he envisions that he can create, right? To where just the GameStop portion of the equity of the combined holding company, Ryan Cohen expects to be worth well in excess of $100 billion. But it's not GameStop alone that's going to go from 10 billion to 100. It's GameStop plus eBay that's going to go from 50 billion to well in excess of 500 billion.
Was there a moment you remember when you said, we should make a play for eBay? Do you remember that moment when you were kind of looking at the business or thinking about the business when this idea kind of sprung forth?
Yes, I do.
What was it?
I was on the toilet.
Okay.
Wow.
You were just thinking about it?
Pretty much.
I'm assuming you've been studying the business because you're in the collectible
So he didn't give a date. The interviewer could have pressed a little harder there, but Ryan Cohen just kind of uncomfortably laughs, fills the space with somewhat of a joke. Although I will say, Cohen, me and you have something in common, which is one of my best ideas also happened when I was on the toilet, which was to propose to my wife on November 30th. I was just I just had it. I was using the restroom and I was like, all right, business world, propose on November 30th, save $10,000 by May, and then I can get married, right? Anyways,
People's business and learning a little bit about it, and had this idea sitting there.
Yeah, I mean, I've followed eBay for a very long time, and I came to appreciate their their experience, their moat in the collectibles space. But it's not just collectibles too. I mean, it's the refurbished tech piece of the business where
Yeah.
GameStop, it's a big portion of our business, and it's a big portion of eBay's business too, and the secondhand business as well. So there were other things that I thought about where I could personally add value and might make sense for GameStop, but this one made sense for me personally, and it makes sense for GameStop. So,
So if you,
it's collectibles, right? There's the other synergies, right? But those are all the icing on the cake. The cake that Ryan Cohen wants is eBay because of collectibles, right? He is going all in on the collectibles industry, not just within GameStop proper, right? But quintupling down the scale by acquiring eBay as well.
have studied eBay, what do you think the team did right in the early days? Was it simply the network effect and the business took off? And once they had the network, it was hard to break the moat. Was there anything about the formula or the consumer model or experience? Because you've said publicly, hey, eBay looks a lot like it did in the early days. Was there something about early management, early design principles, early engineering, anything that happened in the early stages of eBay that made it what it is today?
I look at basically the marketplace model where they had first mover advantage. So their ability to have first mover advantage and really be the like de facto marketplace online, including against Amazon, was significant. So that was really helpful. I wouldn't say that if you look in general at the growth in e-commerce, and you look at Amazon as an example that basically took the marketplace model, but also took taking possession of first party inventory along with growing their marketplace. And like they ultimately scaled it, and they essentially did what Walmart was doing, but they did it online and at scale. I mean, obviously you can't compare the two, but their focus on building a marketplace gave them a moat and staying power. But I wouldn't say that their execution was great. In the early days, it was great when it was founder operated. But since then, if you look at how much e-commerce has grown and how much market share they've given up to the likes of basically everyone, new competitors in the space that are very category focused, live shopping competitors picked off significant share from them, Shopify, social commerce, Amazon. eBay's been able to maintain a revenue base and generate earnings, but they haven't grown along with the rest of e-commerce. So, and if you look at how they've done most recently, I mean, they've basically, the business has stagnated up into the last few quarters, and their operating expenses are up significantly. So, it's not to say, they are the de facto marketplace online, especially in certain categories, but that business should be significantly larger.
Interesting. The one like he didn't really give any props to eBay's, what made eBay great at the beginning, whatever. All he did is say, hey, they were first. And then the only other added context he gave is, and also when they were being led by their founder, right? when the ownership was aligned with shareholders, when the management was aligned with shareholders, because management was also substantial ownership representation, yeah, that's when it was good. Right. Let me just slide that in there. But it's interesting. eBay's lost market share not only to the startups, right? Not only to the Shopify's and the e-commerces and the live this and the Etsy that and the Depop whatever, like they've also lost online market share to the legacy retailers, right? To the Target and the Walmart, et cetera, right? Everyone has grown their online market share because so many businesses haven't made it through this transition to e-commerce, right? So the total pie, the number of competitors in the pie in some ways has gone down from a legacy retail compared to today. So even most of the legacy retailers, the ones that are still around, have grown as a result their slice of the pie because some people have bowed out of the race. And somehow eBay, as a pure play in the e-commerce space, has lost market share when it has been in position to gain what should be an unassailable lead.
Do you think they missed the boat? And if so, why on stores? You know, Amazon stores, Shopify obviously have become categories unto themselves. All of those power sellers probably transitioned over to having stores at some point. What did eBay miss? Was it purely execution? And is there still an opportunity to win back that market?
eBay could, I mean, and I'm not advocating, I mean, this is not something I would not go head to head against Amazon today, but I mean, eBay could have been Amazon. So when you look at what Amazon has built, I mean, everything from taking inventory and their principles of they provide a great customer experience. And so, I mean, that's why we all love shopping on Amazon. And as a seller, Seller Central is a very powerful platform, and sellers generally like it too. I don't know if they necessarily like the margins, but they can move a lot of inventory on Amazon. So eBay, by doing nothing, has basically carved out a niche in certain categories where Amazon isn't strong because they're strong in other categories. And, you know, you're buying a phone charger or new products. It's not necessarily the place where you want to search for like a, a unique baseball card or a hard to find pen or a used auto part. I don't know if it was necessarily through strategy or just because they ended up basically like defaulting into those categories because their largest competitor was focused on other things.
That's really interesting. The question was, did eBay miss an opportunity by not going into stores? Right? Most places that sell things have stores. Is that the strategic error that management made? Ryan Cohen doesn't answer that at all. And in fact, he says, well, what eBay really missed was online, right? It's not that eBay should have become omni-channel. It's that eBay has underperformed e-commerce. It could have been a bona fide, it could have been the e-commerce giant. Now it's too late to be Amazon because Amazon's already been made, but they could have aggressively grown their e-commerce footprint, and instead they just let the business run almost kind of passively. And as a result, they've lost a ton of opportunities. And reading between the lines, like Cohen saying they also could, yeah, they could have done stores, and that would have been better too. Not as good as if they had built Amazon, obviously, but if they had done anything with focus and intention, they would be worth more than how they have run, which is almost reactionary, right? Let's just see where our business kind of morphs and where our customers are, and let's just let that come. And everyone's getting paid, right? So everyone's happy at the end of the day, all the management, all the employees. But the opportunity from again, from an entrepreneur mindset is, man, this has been a total failure. This could have been a dominant player in e-commerce, and it still is one of the dominant players in e-commerce, but it could have been much bigger than it even is.
Do you think Amazon's over earning right now? because I think the point you make resonates with me. I've been involved in a number of businesses I've been on the board of, and I see the margin that Amazon takes from sellers, and everyone's frustrated about it. It almost feels to me like everyone's hungry for an alternative. But the reason you stay on Amazon is the reach and the audience that you get with Amazon. So there's not a lot of other places that offer a competitive alternative to Amazon to those sellers. eBay's got a pretty big audience. I mean,
This is really interesting because eBay gets similar flack. You know, the seller fee is too high, right? 14% fees. It's crazy. And a lot of people think, man, if GameStop were to start their own eBay, like the way they could get customers there is by offering a lower fee, right? So the question is, basically, are you going to lower eBay's fee, right? Are you going to try to be cost competitive for the seller if you buy eBay? And will that ultimately, maybe you actually will end up taking some market share and going head to head against Amazon, even though so far publicly he said, hey, we're not going to go after Amazon, right? Is that is that true? Or are you going to cut a leg out from under Amazon, right? Undercut their seller fee and give sellers an opportunity, right? Create a whole new platform within eBay, which is new, right? Here's eBay used, here's eBay new. Are you actually going to go against Amazon? And if you were running eBay, would you lower the fee?
do you think that Amazon's over earning in that sense? And is there an opportunity for eBay to step up and compete in that sense?
They charge a lot of money to their sellers. I agree with you. And sellers like it because they move a lot of inventory, but they don't like the margins.
The problem would
Very interesting.
obviously be inventory, right? I mean, if eBay were to go in that direction and you were running eBay, what do you think you do about inventory and logistics?
I would not be interested in taking in first-hand inventory.
Right.
I like the marketplace model and the categories where eBay is doing well are categories where GameStop is doing especially well also. But going head to head against Amazon is it's not the most attractive business.
So what do you think? Is he telling the truth? Reading between the lines, it doesn't seem like it's honestly Cohen's priority to undercut Amazon and outdo Amazon in the ways that Amazon has already created market leadership. Is that like an opportunity that eBay pursues eventually? Like, is that part of its pipeline? Sure, but the lower hanging fruit that Cohen sees with eBay is the collectible synergy, the trade-in synergy, right? Decentralized warehouses, right? Seller fulfillment and the dominance in the collectible space and the expansion of GameStop's exposure to other store value plays, other collectible plays beyond just TCG and sports cards, but getting into jewelry and watches, etc. Fancy pins, which apparently Cohen's into. I agree, Cohen. I was the pin seller in middle school. Had my fancy pins in my jacket pocket. That said, I think Cohen knows that there's an opportunity there. You know, it's just not the first one. Like his initial reaction to, man, sellers do not like the fee that they're paying. Again, you think about it in context of earlier in this interview, right? Sellers for Amazon are the vendors, right? The customers are the buyers. Sellers are the vendors. Same with eBay, right? The customers are the buyers, sellers are the vendors. How did Ryan Cohen describe himself at Chewy in his negotiations with vendors? Right? Savage, right? Vendors were upset at him. He said, if you're sending gifts to your vendors, or if your vendors are sending gifts to you, right? If eBay sellers or if Amazon sellers are sending flowers to the marketplace where they sell, right? If Chewy's suppliers are sending flowers to Chewy, the marketplace where they sell, you're doing something wrong. So I do not think Cohen has some sympathy for, man, sellers are upset about this. But what does he say right after that? He says, yeah, but the reason they like it is because they can move a lot of stuff. Why did these vendors, these suppliers, ultimately work with us in my harsh negotiations back at Chewy? Because they want to sell their stuff. and we own the store, right? If you want to sell here, here's the price we need. Can you make it work or not? Walmart's done the same thing again and again with their suppliers, right? Infamously. Like, it doesn't sound to me like Cohen is thinking we need to save the seller fees as much as possible. We need to have a nice relationship with our sellers, right? That's the temptation. That's what he described as the human tendency is let's just make everyone happy. But again, what did he say earlier in this interview? That is a flaw, right? That it's actually more important from a business perspective to maximize your business value, and that does not mean being buddy buddy with your vendors. Is it a little bit different in a pure peer-to-peer marketplace setting? Does he become a little bit more inclined to think of the sellers as almost like its own customer base? We're selling ourselves to sellers and we're selling ourselves to customers. It's possible, but it's not what he's described so far. And there's nothing he just said right there that makes you think that he's interested in going against Amazon, particularly, and that he's interested in lowering seller fees. It doesn't seem like his priority. He said, "Hey, eBay can make its fee in these categories. People are paying eBay a nice fee. you know, why would I add more categories and compress eBay margins when I'm not even planning on lowering the fee that we already have, much less going even lower than Amazon on different new categories."
eBay is notorious for having bought and then sold a number of big businesses. They bought PayPal and then later spun it out and divested, and they bought Skype for 2.6 billion in 2005 and then sold 70% of it for 2 billion in 2009, and then they got lucky with Microsoft overpaying in 2011 and they made another 2 billion on it. So they netted a good profit on the Skype sale. So when you think about the audience that eBay has, the user base, there's a lot of ancillary businesses you could get into. When you look at PayPal, when you look at Skype, were those strategic errors or were they tactical errors, meaning they were good strategic moves, but they were mismanaged and not well integrated, not well run after the acquisition? What do you think happened there?
Well, if you look,
In other words, why not just hold on to PayPal, right? Why buy it and sell it? Why not become Berkshire Hathaway yourself?
today at eBay, I mean, I like focus. So them focusing on core eBay makes sense. I mean, my strategy at Chewy wasn't creating all these other sub-brands for different geographies. It was always focusing on Chewy. So,
Which again, in context of what we just talked about, seems to reiterate that sentiment I was just sharing. Like, I'm not going after undercutting seller fees and competing against Amazon directly in that way. Like, I'm focused on making eBay the best eBay, not on adding more and more things that eBay could be doing and competing in.
the focus is helpful. I'd say in eBay's case hasn't resulted in significant GMV growth, if at all, or earnings growth. But I do like being focused. Now, I mean, they've recently made acquisitions which don't make sense, but generally speaking,
Wow. Okay, he's come out and said it. Come out and said it. We talked in a couple of videos recently about if eBay were to take the pain pill themselves, right? If they were to do what Cohen would do, what would they have to do to fix their balance sheet and fix ultimately their operating margins, income statement? One of the things would involve probably selling off some of the businesses that they've acquired, including the most recent one, Depop, right? Like, and it's interesting to hear Ryan Cohen call eBay out for acquiring businesses, saying that those acquisitions didn't make sense, right? So, are there some pieces of eBay's business that Ryan Cohen goes in and says, "Hey, whatever the net loss is, great. Like, we had this, now we don't. We're getting simpler. We're cutting margins, right? We're not going after every little piece of revenue wherever we can find it. We're going to focus on growing earnings wherever we can find it."
like, I like focusing on a singular brand, and especially with a business that's global, there's a lot of upside. And, eBay plays in a ton of categories already. So it's hard to do multiple things exceptionally well.
Yeah, the other example, obviously, is StubHub, which they bought and then sold to the founder, Eric, at Viagogo for 4 billion years later, but also didn't really transition well. Does that mean that eBay can't really do well in other marketplaces, or do you think it's about building the product organically in a better way to expand into other marketplace verticals?
Yeah, building it organically through eBay and through focus is where I believe makes the most sense.
In other words, like within the space of e-commerce, within the space of resale, like we don't want multiple brands, right? We don't want to be we're this store and we're this store and we're this store, right? We're ebay.com or we're etsy.com or we're shopify.com or we're Depop or like all these things that eBay's acquiring, saying, hey, why don't you just be eBay? You're already in that space. You don't have to buy to expand your position in that space, right? Chewy didn't have to go buy more and more mom and pop pet stores or regional pet stores to grow. No, just do what you do well. You're in the same space. If you do what you do better than they do what they do, then you are going to end up taking their market share anyways, right? GameStop is not buying Best Buy, for example, right? GameStop is not interested in, through acquisitions, expanding their revenue base through multiple different brands, etc. It's like, hey, you're already a competitor to Best Buy. Just do what you do better than they do what they do, and you will grow within that space. GameStop is buying eBay because eBay is in a different space, a different stratosphere, a lot of synergy, but eBay is not a business that GameStop can organically grow into. But GameStop can organically grow into a larger electronics and video games and collectibles retailer in America, but they can't create the marketplace effect, the network effects that eBay already has in the online space. Similarly, can't eBay can organically grow without through acquisitions. They can organically grow their e-commerce market share and their profitability on their sales. They don't need more and more brands to become a better and better e-commerce retailer. So interesting to see. I mean, a huge takeaway from this interview is that like some of eBay's business is getting sold off and slashed once Cohen owns it.
What's happened with the business in the post Donahoe era? He left, I think, what did he leave a couple years ago? 2015. And it's been about 11 years. I mean, if someone were to ask you, hey, give me your summary of what's happened to eBay in the last 11 years, how would you kind of talk through what's happened in the business?
I mean, if you just look at how they've done in the past since COVID, every important metric is down. GMV is down, active users is down by 30 million, operating earnings is down. Revenue now is basically essentially break even. It's up a few points, and operating expenses is up significantly. Their operating expenses now are, for a business that has no inventory, their operating expenses are over half of their revenues. So that's a business that they're not growing. Everybody else in e-commerce is growing, and they're making less money and they're spending a lot more. And their sellers, frankly, aren't happy. Like, you talk to sellers, and in order for them to do business on eBay, they have to use all kinds of third-party tools outside of eBay because eBay's not even providing those tools. I mean, Amazon Seller Central is like soup to nuts. You could pretty much do everything in Seller Central, whereas with eBay, it's a pain, and they alienate their sellers. I mean, they had concierge programs for their top sellers, and now it's like they take their sellers for granted, and they're taking advantage of them. So the sellers, in a marketplace model like eBay, the sellers are the customer. You make your sellers happy, you give them the tools, they bring more.
Sellers are the customer. Very interesting. Okay, so that is the way that he is going to view eBay.
Inventory online, and you end up ultimately doing more sales, and they're not working with their sellers to make them happy. So It's not that complicated. You talk to the sellers on the phone, you talk to the top sellers, you ask them what are the pain points, and you get the engineering team on the phone with the sellers and you start basically banging them out. But, I guess existing management team doesn't roll up they're not going to roll up their sleeves. They're going to go to outside consulting firms to tell them how to run their business.
Is that what's happened?
Okay, so this is the implications of this are huge. So Cohen does view the sellers as not just a customer, but the customer. The customers, similar to Facebook, right? The customers are the marketplace effect. That's the offering, right? That is the product. The products that eBay provides is the network effect. The product that Facebook provides is the network effect. The customer for Facebook is those running ads to the users of Facebook, right? Instagram is free to use. Wow, look at all these users. The users. The users are not the customers. The advertisers are the customers. Sounds like that's exactly how Cohen is thinking about eBay. The buyers are not the customers, right? The buyers have to come here. We are the only one. We are the online. If you want used anything, if you want collectibles, you have to come here. So we don't have to fight for you. What we have to fight for is our customers, which is the people that are paying us the seller fee, right? The customers don't pay eBay the fee. The sellers pay eBay the fee. So Cohen views the sellers as the customers, which is very exciting because it does indeed mean that down the road, not right away, but down the road, Cohen very well might go after Amazon in a more direct way. Although he's saying everything that would make you think he's not going to, it's obviously not his first priority, right? First priority is similar to the pain pill that GameStop took. First priority is increased profitability through even maybe some top line reductions, right? Decreasing ad spend, etc., right? Top line for eBay will come down for some period of time as income is going up and up, cutting out a ton of fat from SG&A. But down the line, right after the business is right sized, retrofitted, earning substantially, does he say, "Hey, we have mastered the art of the supplier customer relationship. The customer is the supplier. It's not the Chewy vendor where they are just a vendor. This is the uh, this is the customer ultimately that's paying eBay and therefore the customer of eBay." Which means that you can see the grand vision as far as how many slices of the market share in e-commerce Cohen ultimately might really go after through delighting the customer, the seller.
What you state seems obvious. So do you think it's that management's simply been complacent and collecting a paycheck and no one's acting like an owner? No one actually knows how to execute? Or do you think they fundamentally would disagree with that strategy, those points that you're making?
Well, they're never going to admit it, but I would bet everything that they're working with multiple outside consultants and for a lot of different reasons, and they're not making their sellers happy. So their sellers are on the platform because they do a lot of business on the platform and they want to move product, but they don't feel like eBay wants to make them succeed and is working with them to do more business together. So that's what happens when you go from a business that founder, operator run to business with a professional management team is, you lose the one-on-one and the rolling up your sleeves, really getting into solving the root cause of problems.
Do you believe in building long-range operating plans, meaning would you articulate?
I'm really excited to continue to flush out and brainstorm the implications of Cohen operating eBay with eBay sellers as his primary customer base, his primary focus group. I think that's super bullish, super exciting.
A strategic vision for eBay and then write out what you're going to do over the next 3, 4, 5 years so that the shareholders that are considering your acquisition offer can see both your vision and your plan for execution on that vision over the next several years? Or are you much more of a responsive manager where you're going to go in and diagnose and be much more of a tactician in iterating almost in an agile way the business
Basically, are you going to give us guidance ever?
to success? How do you kind of think about presenting how you're going to be more successful in operating this business than existing management?
So there are three areas. Number one is on immediately improving earnings through cutting costs and pulling $2 billion of costs out of the business. And on the operating base of close to $5.5 billion of expenses, and $2.4 billion spent on sales and marketing for essentially no user growth, there's a lot of money to pull out there. So you have the immediate increase in earnings through cost cutting. That's basically one. And then there's two growth vectors that I'm very much interested in. Number one is live commerce. And there's a large competitor that is completely crushing it. And eBay has the users. eBay has the brands. They have a platform, but the platform sucks for a lot of different reasons. And they don't have the content creators on the platform, and nobody even really knows eBay Live exists. There's like an application process. I talked to sellers, and they're telling me like they've applied to be a seller, and they are waiting to get approved. It's like they're basically stopping themselves from being successful and getting content creators onto the platform. And then the entire back end of eBay Live also sucks. So live commerce, the TAM is like 400 billion. It's growing very quickly in the US. It's very popular in Asia. And eBay Live should be significantly larger. They should be the category leader in the space. And they have like at max a few hundred people, in basically watching their sales. So that's a huge growth opportunity for them to start doing really well in live commerce. And the benefit also we have with the stores beyond basically fixing the platform, the front end and the back end, using the stores. There's 1,600 essentially nodes that can be used as studios for creators. They could be used as fulfillment and logistics, and ultimately allowing sellers and the content creators to do what they do best, they just create content, and we can help them on photography, we can help them on fulfillment, we can help them on logistics. And we can also do the authentication, and that extends to the marketplace model as well. So I would focus a lot on growing the live commerce side of things beyond the cost cutting. And then the third thing.
That's interesting. I've thought, Cohen's talked about, hey, we could use our stores as live commerce hubs or studios for live commerce. And I thought, why would a content creator want to go to a GameStop to sell their stuff? Like, why wouldn't they just keep doing it where they've already been doing it? And how does the storefront really help eBay competitively create a live commerce business that's more enticing? It sounds like Ryan Cohen's already thought about the incentive structure that he would give to sellers, which is a lot of the fulfillment and back end support. Basically, like, we'll do everything. Like, you just be the content creator, like, just be the personality. You can do what you do best, grow your audience, build trust, have fun, and we will do all of the actual sales logistics. So you don't have to do any of that. It sounds like he's prepared with a pretty compelling offer to make it worth content creators' while to partner with GameStop plus eBay as a live commerce outlet.
And this is something that I have not spoken about before publicly, but eBay today is the leader in physical items, physical collectibles, as an example. And so I would extend that into digital collectibles. And essentially, if you look at all of these in-game items, AAA titles that people are accumulating, skins, weapons, all of these things. Taking eBay and building a marketplace where you can provide liquidity for in-game digital items. Essentially, it's what NFTs could have, people thought they were, but ultimately they had no real utility. In-game items actually have real utility. And if you look at all of these collectibles, frankly, they're an ego play. You own art, like, what is that? At the end of the day, it's an ego play. If you look at trading cards, I mean, it's a piece of cardboard in a piece of plastic, and they're very, very, very popular, but there's no real utility to them other than being able to tell people you've got a really unique trading card. But if you look at in-game digital items, there's no marketplace that is providing liquidity for them. And so I would use eBay to provide liquidity for in-game digital items. And
That's crazy. That's crazy. So eBay becoming the resale leader, not just for physical goods, but also for digital goods. And a easy use case for that being skins. I've talked about how one of the reasons that Cohen wants eBay is to solve the inventory problem for power packs. That's another interesting implication, and really to digitize and gamify the retail experience. It's an interesting implication of what Cohen just said. Like, we want to turn eBay into a digital business, not just a transfer of a physical good, but a money printer transferring digital goods that don't actually have any fulfillment backend, right? So whether it's power packs, right, which, 6 out of 8 or 7 out of 8 uh, sales are resold immediately back to the vault. They never even leave the vault to begin with, right? How many more implications of that can we create within if we own eBay? Super, super exciting to think about the margins that that type of business would have and the utility and the staying power, right? The recurring revenue, the stickiness. Where else can you go to buy someone else's blank? And how many things can we get someone else to own that are digital? Even again, in the Power Packs example, even if people keep possession of the card, right? How do we incentivize people to keep it in the vault? If someone buys a card from Power Packs and they keep it, but they don't actually receive delivery, it stays in the vault. For all intents and purposes, that's still a digital product, right? How many digital products can we get people to own? And then also, how do we add some staying power, some confidence to that digital business? How do we create digital products that have utility, right? And not just store of value, although the store of value play is huge, right? Cohen loves collectibles. It's the apple in his eye why he wants to own eBay in the first place. But the added security and strength that it could provide a business to be able to buy and sell digital products that have utility, gaming being an an obvious first implication, but how many other digital products do you interact with? Whether it's from your, like, whether it's streaming videos, music, right? Could you buy and sell royalties, right? Buy and sell the ownership rights to to videos, right? Buy and sell ownership rights to maybe different apps you've created or uh, documents, spreadsheets, Google Drive, calendar events, emails, right? How many digital products can people own? And how do we become the marketplace where people can buy, sell, and trade their digital products? Absolute money printing.
And I believe that addressable market is significantly larger than, could be much larger than eBay's marketplace on physical items. And no.
That's crazy. He thinks they'll do even more in revenue. He's not talking about profits. He's talking revenue for the digital buy, sell, trade marketplace would exceed in time revenue for the physical, which what's revenue for physical? $23 billion. He thinks they'll do more than 23 billion through digital sales compared to physical. By the way, what are the margins going to be on digital versus physical? The margins are going to be even higher on digital. What's the fulfillment? It's even more streamlined. What does that mean? They can still charge a high fee to sellers, right? eBay can make a killing on this. And sellers are happy because where else were they going to sell? Where else can you sell your skin? Where else can you sell your video game character? Where else can you sell your YouTube video or your uh, piece of music or whatever other digital products they end up creating marketplaces for? It's like, yeah, if you want to take a 20% fee, like it's all gravy for the seller. It's all assets that were previously not able to be monetized. Selling a physical good on eBay, it creates a little bit of tension to bite that 14% fee. Why? Because of Facebook Marketplace. There is a way that you can sell this good and you will make more money. It's called Facebook Marketplace. I have personally started and sold a resale business that was doing multiple hundreds of thousands of dollars a year in revenue, totally buying and selling used items. And by far the most profitable vehicle to do so was Facebook Marketplace above eBay. And that's coming from someone that's probably done 100,000 in revenue just on eBay. The margins on Facebook are higher, and as long as you and bona fide sellers, guess what? They're not reading they're not worried about some random news article that tries to FUD people away from selling on Facebook. It's like, man comes to buy on Facebook and he murders this person in their front yard. Facebook Marketplace is all criminal. Like, I dealt with dozens and dozens of people every week buying, selling on Facebook for years, right? I mean, just thousands and thousands of people have interacted with, nothing even close to sketchy, right? So the pro sellers are not worried about that. And again, it's why earlier he asked this question about, hey, most pro sellers on Shopify, they end up making a store, right? Most pro sellers realize they need a physical store to continue to scale the way they want to. It's the biggest hindrance to eBay's upside growth in their physical marketplace is that people can sell physical locally. There's a lot of avenues to sell physical locally, and they will make more selling physical locally, even if there wasn't any eBay fee, because at the very least they're saving the shipping costs and the shipping and handling time. And by the way, if a customer needs to return something, well, now the seller has to pay shipping again to get it back to them, or leave the item with them, and that now they make no money and don't have the product, right? And in a physical store, the buyer brings it back to you. Not only do you not have to pay shipping to send it out, you also don't have to pay shipping to get it back, right? So the margins locally, physically, are higher, which is a competitive disadvantage for eBay. Obviously, the advantage of eBay is you have greater scale. The point is, digital solves a lot of those problems, and the competitive advantages eBay would have are even higher in the digital resale space. And again, NFTs were kind of like the early sign of it, right? But the we're just in the beginning cusp of digital monetization, tokenization, right? Authentication in the digital space to add revenue, income to digital assets that otherwise were not monetized, which again, you can charge a higher seller fee without sellers feeling disgruntled about it because you're providing something that they don't have an alternative for. 14% seller fee or whatever Amazon charges, it hurts because you could sell locally without any fee. A digital fee of 25% might still kind of sting, but 19%, it's like, look, I don't have any other way to sell this. So even if you were to take 50%, right, you're still offering me something that I have no competition for. I have no other way to monetize this. It's all gravy to me. crazy. More than 23 billion in revenue, which would be how much do you think in profit?
One's doing it, and this should already exist, and it's kind of like it's crazy that it doesn't exist.
The eBay board has rejected your offer. Is it that they're looking at Ryan Cohen saying, hey, you're a guy that ran Chewy for a few years and sold it, and you've been running GameStop. You've never really operated a business of this scale. We're not going to hand over our shares for your shares and put you in charge of this overall enterprise. You don't have the experience, you don't have the skills, you don't have the competency. What's their rationale for rejecting your bid, and what's the feedback, the frank feedback you've heard either behind closed doors or through, third parties about what's going on here?
Well, they put out a rejection letter which said that our offer was incredible and there was a lot of uncertainty, and frankly, and by the way, I mean, this is expected. They don't want to hand over the reins. They're making a lot of money, and so I completely understand why they're taking the position that they're taking. But they spelled it out in the rejection letter, and number one was that, like, the financing uncertainty, which frankly, if we can't get the financing, it means that eBay can't get the financing, because we're getting the financing off of eBay's balance sheet. But there has not been very much engagement from the management.
It's a great point, by the way.
Board level, frankly, there's been really no engagement. I mean, they're playing games. They pointed us to their high-priced advisors, and then when we reach out to schedule a meeting, they don't schedule the meeting. So
when you first,
it's crazy they won't even take a meeting with them. I mean, that's absolute insanity, honestly. Just crazy.
Started having this idea sitting on the,
like, Cohen's not talking to his best friend at a cigar lounge right now. Like, this is All In Podcast, over 1 million subs on this channel. Like, for Cohen to say this matter-of-factly, this publicly, it looks horrible for eBay. Like, these are all voters hearing this that will be deciding whether to keep that management team or keep Cohen. Like, it just points to how screwed eBay's management is. That they are not interested in saving face, at least a little bit, compared to what Cohen is able to, like, the painting that Cohen is able to illustrate about the current state of eBay. eBay is helping Cohen out by their actions, right? They're playing to a T exactly how Cohen's describing them. And if they're doing so, it means that they think that's their competitive best interest. Like, it'd be even worse if we came out to show you who we are. We'd rather say nothing and hope that maybe someone doesn't trust Cohen, right? Like, it's crazy.
John, and you're,
By the way, I'm just pumped about this digital resale space. I had talked again in previous videos that, like, there's one I titled "What You're Not Seeing About GameStop's Pursuit of eBay," and I basically laid the case out that the gamification of retail is what GameStop unlocks by owning eBay, and I still totally believe that is true, but it is also the digitization of retail, right? All of e-commerce is all competing on physical goods. How do we get this from there to here? There's no bona fide e-commerce brand that's focused on digital goods. Like, the digitization of resale, the digitization of retail, and the gamification that can happen when there is digitization, right? They go hand in hand together. It's one step that leads to the other step, but gamification might not necessarily be the ultimate step so much as just purely the step that's required for the gamification, which is the digitization. All that to say is we've been all over this, but to hear this confirmation and even added clarity from Cohen, it's just incredible.
like, I'm going to move forward with this thing. I mean,
As well as the scale of what he thinks that business will do. Again, just
assuming at some point you called bankers and talked about structure around this to figure out how do we put this bid together. Where do you go down the path where you said, let's do half cash and then convince them to take our stock and basically roll their stock into our stock and let us run the business versus raise the capital to do an all cash offer for the company? Is it impossible for you guys to convince shareholders, investors, capital providers, large institutions, banks, lenders, and so on, to put together a syndicate of $56 billion of cash so you could make this an all cash offer, which would make it a lot harder for them to simply reject so easily?
Could you afford it? That's the question.
Maybe you can walk us through the banker conversations and the process you've gone through in thinking about structure here.
Ultimately, the decision is, who do you want to run the business? And who do you think is more competent to run the business, and who's going to maximize shareholder value? Because by giving existing shareholders GameStop shares, GameStop, the combined company, at least in the very near to medium future, the earnings are coming from eBay. So they're going to continue owning eBay. We're offering them 50% cash, 50% stock at a premium to where we bought it. And essentially they get to continue owning eBay, except you've got someone that is highly incentivized to maximize shareholder value, knows a thing or two about e-commerce and running the business efficiently.
But why not go all cash, Ryan? Like, why not?
Yeah, so far, Ryan Cohen totally dodged that question. And the interviewer is saying, no, I actually really want you to answer that question. Could you do all cash? Like, if you wanted to, could you? Can you afford it? Or do you have to do half stock because there's no way for you to be able to finance the whole deal in cash?
Raise the capital. If you can raise half the cash to do the bid, why not raise all the cash? Sell your shares, sell GameStop shares to investors to raise the cash that are aligned with you rather than the investors that own those eBay shares, and then go make them an all cash offer.
I mean, that is not what we've presented to date, and that's a lot of cash to come up with. So, we don't have $60 billion of cash just lying around.
Right.
Interesting the way the interviewer phrased that. Like, he's like, hey, why not sell your shares to then buy it in cash? You would need to have an agreement. Like, if GameStop just dilutes their shares to try to raise 60 billion in cash, like, they're a $10 billion company. Like, that, the way the interviewer presents it is exactly the way the Squawk Box crew in Ryan Cohen's first interview in this cycle he's done was saying, hey, the math doesn't add up. Like, if it's an all cash deal, the math doesn't add up. You can't sell enough shares of a $10 billion company unless an agreement's already in place, right? They need eBay to participate in that type of negotiation for it to be an all cash deal. Without eBay's participation, there's no all cash offer on the table, right? If it's going to be a hostile takeover, then it's going to be half cash, half stock. If you're an eBay shareholder, why would you still approve it? Because then you still get to own eBay, right? Your equity exposure is still to eBay, and the majority of the valuation of the combined entity would be based on the eBay business, not primarily based on the GameStop business, at least at the beginning. And so it's an easy selling point for shareholders of eBay to say, yeah, this is in my best interest. And Cohen's basically saying, look, could we find a way to do all cash? Maybe, but it's not what Cohen considers to be in his best interest or in GameStop's best interest, right? The whether it's the cost of debt and how that would impact earnings, the level of risk, right? Cohen has said he's very debt averse. He doesn't want a bunch of debt. Even with the half cash, his priority is still going to be to pay off that debt, right? Which he has said publicly. Like, he doesn't want debt. He also has shared in the share authorization proxy materials, like, that the shares of GameStop are precious to him. Like, he doesn't want to just issue more and more shares in the float. He wants as little dilution as possible and as low of a debt load as possible, as high of a profitability and an EPS accretion as possible. Again, if you do all cash, it might be harder to say that this deal is accretive from day one. right? It would probably be accretive for the share price, but from an EPS perspective, it wouldn't be accretive if you're paying so much in interest, right? Like it would be almost all the earnings going to interest expense at the beginning. So again, could they? Yeah, they could, but it'd probably require some participation from eBay, and it's not the structure of the deal that Ryan Cohen prefers. So the interviewer is saying, "Hey, the reason you would consider this is it might help the deal happen faster." And Ryan Cohen's basically saying, I bet I can convince shareholders to accept the deal as presented, even though it's not necessarily as ideal for them as if they had an all cash deal. It's still attractive enough, my leadership versus their legacy leadership, that I bet they'll take it. And it's certainly worth putting that foot forward and seeing what happens, as Ryan Cohen likes to say.
Right. Well, tell me about the owners. Have you spoken to any of the shareholders at eBay, and do you have a view on how they're thinking about voting their shares? My understanding is there was recently a rejection on the ability to call a special shareholder meeting. There was a vote that failed to reduce the threshold to 10% of shares outstanding. It's currently at 20%. So that failure means you cannot call a special shareholder meeting without 20% of the shares calling for it. Is that right?
Yeah,
and
it
so
was close. It was close, but that's right.
And so if you go through and start talking to the actual owners of eBay today, because it's a pretty broadly owned, institutionally owned stock, have you started having those institutional conversations to see where folks are at and how they're feeling about management
Very interested to see what his answer is here.
and how they're feeling about your strategy and your ability to deliver value for them over the next couple of years?
Yeah, I mean, I don't want to. I don't want to get into individual shareholder discussions, but
Yeah.
the consensus has generally been aligned, which is they love the business, and yeah, they see a lot of opportunities. So
Wow. That's huge. This might be the biggest takeaway from the whole freaking podcast so far. And there's been a lot of good ones. Have you talked to eBay institutional shareholders? Cohen says, yes. I don't want to get into the specifics, but yes, I have. Have you been able to talk to them about whether they would vote for your bid or not? Right? And specifically as it relates to even calling a special meeting in the first place, you need 20% to call for the meeting. You only own 10% as GameStop, so can you even get 10% of the shareholder base to join you in calling for the meeting in the first place? And if you called for the meeting, do you think that you would get the votes? He's saying, hey, generally, the consensus has been aligned. Aligned with who? Aligned with eBay's management or aligned with Cohen's vision? Aligned with Cohen's vision. The consensus of eBay's shareholder base is aligned with Ryan Cohen. Did you catch that? Let's just play that again. How do we even do that? How do we go backwards to hear that again?
been aligned, which is they love the business.
Oh.
I don't want to get into individual shareholder discussions, but
Yeah.
the consensus has generally been aligned, which is
The consensus of eBay institutional shareholders has generally been aligned with Cohen's presentation of eBay's failures and eBay's opportunities, right? Cohen's description of where eBay needs to improve and Cohen's proposed solution of him taking over the company. Guess what? eBay shareholders consensus, not just a lot of them, not like the conversations we've had, right? No, the consensus is generally aligned with Ryan freaking Cohen. Let's go.
love the business, and yeah, they see a lot of opportunities. So we'll see what ends up ultimately happening, and maybe the composition could shift because if you love the business, you might not want 50% cash. You might want to stay invested.
The composition could shift. Wow. Okay, so the issue, the holdup, why doesn't GameStop already own eBay? It's it's has nothing to do with whether Cohen will be approved or not, right? He has alignment, consensus alignment on the big picture with eBay shareholders. The holdup, the discrepancy is what does the composition of the deal ultimately look like? And it sounds like the issue is not the issue the interviewer was talking about of, hey, they probably want all cash. It sounds like the issue is they want more stock. They want less cash, more stock, which again would make sense as to why GameStop is aggressively buying as much of the float as they can with their own cash, because then the half stock portion, if it ends up being 70-30, 70% cash, 30% stock, then again, that's 70% of 85% rather than 70% of 100%, right? If they buy 15% outright with cash, then even if the composition structure changes, well, they've in a way that increases the equity portion above 50%, right? That is the negotiation that's happening right now. How much equity of the combined entity do eBay shareholders get? That is what the institutions are going to bat for. They want as much equity in GameStop plus eBay as possible. That's the negotiation happening. And I talked about, let me just back out of this real quick. I talked about in my video covering the performance award right here, right? The Casey Shuffle on his comp plan. One of the, oh, let me go ahead and like this. One of his, one of the most important takeaways of Ryan Cohen withdrawing his performance award to lubricate the eBay proposal is related to the issuance needed to complete the deal, and it adds insurance because it takes 171 million shares out of the 2.5 billion in authorization. It removes 1.7 million from the equation. It means that GameStop can issue more shares if needed. I talked about in my video how that protects GameStop from a short attack perspective, but now it makes even more sense in light of this interview that we're listening to because Ryan Cohen just told you that eBay investors are fighting for less in cash and more in shares. Well, guess what? If GameStop owns 15% already outright, 15% of eBay shares ultimately get retired. Well, of the if the rest of the deal is, let's say, 40% cash, oh geez, E79, and 60% shares, check it out. Ultimately, that's more in shares that gets issued than if it was 50-50 of 100%, right? It's potentially 28 billion in shares on a 60-40 split if GameStop buys 15% themselves, right? No matter what way you do the math that's happening right now, the argument that's happening right now is we want more shares, we want more ownership. We believe in you too much, Ryan Cohen. Everyone wants you to own it. We just want a bigger slice of it. And again, what if it's 70-30, right? Well, now you're talking about 33 billion in shares getting issued, right? So again, 33 if 33 billion is getting issued, well again, even at $22 a share, now you're talking about 1.5 billion in additional issuance on top of the 651 that's already accounted for. So again, it makes more and more sense for Ryan Cohen to pull his comp, not related to whether his comp was going to get approved, but to add insurance and assurance to the success of an eBay acquisition, even if it means negotiating. And Ryan Cohen just said the composition might change. Ryan Cohen's not concerned about if he'll be able to acquire eBay. Right now, they're just arguing about what's the compensation for eBay shareholders ultimately going to look like. Let's listen to it again.
So we'll see what ends up ultimately happening. And maybe the composition could shift because, if you love the business, you might not want 50% cash. You might want to stay invested. So, that's a possibility too. Ultimately, the vote is on who's going to be a better fiduciary of capital and who can grow this business, me or someone that's basically selling stock hand over fist. And by the way, has not bought a single share of stock in the open market with his own money and has been selling tens of millions of dollars. And the interesting thing in this, and
Look at him changing the conversation. Like that pause to ultimately the composition. And he had a long pause and he said could shift. It sounded like he didn't really mean to go into that. Like he didn't really want to say that, but he started saying it. And so he had to go ahead and finish saying it. But I think this is a huge, huge implication. Firstly, the consensus alignment with Ryan Cohen from eBay shareholders. And secondly, the reality that GameStop may have to buy a they might have to issue a higher percentage of shares to eBay than the 50% breakdown, which ultimately would save GameStop cash. It would make the combined holding company that much more profitable. It would be that much more accretive from an EPS perspective. It's still bullish no matter what way you slice it for a legacy GameStop shareholder to get to acquire a 50 plus billion-dollar company and immediately have S&P 500 inclusion on the horizon. Like it's bullish no matter what, especially if you then think about him improving the company, increasing profitability, exposing these underperforming potential growth vectors. It makes so much sense, but GameStop might have to pay up a little bit more in shares. It's crazy. That is and now he's changing the subject, right? Ultimately, it could shift, and now he's talking about the corruption of eBay's management. It doesn't sound like he's too worried about will he get the votes, but it might end up being more than half stock. Crazy guys.
maybe you can help me understand this, is that there's no question what I'm doing is it's big. It's not every single day that something like this occurs. But why does everybody want us to fail? Why does everyone want GameStop to fail? And why is everyone, like the media as an example, why is it that you've got a management team with no skin in the game? They're not builders. They haven't built anything themselves before. They've basically just been employees at major companies, have been overpaid. I don't think they've ever broken out a sweat in their entire lives. Why does everyone want them to succeed? But when you have someone that, and by the way, this is going to be coming out. It hasn't been filed yet. Maybe by the time that, when this airs, it will be. But I'm putting 500 million of my own money into this transaction. I haven't pulled a penny out of GameStop.
Let's go.
I've invested a lot of money into GameStop. I've been doing it for a long time. GameStop's a much stronger business today. Everyone hates GameStop, and it seems like everyone in the media basically wants us to fail and wants them to succeed. And
500 million into the transaction. Does that mean he's buying, like he's providing 500 to GameStop to be a part of that 20 billion? Does that mean he said there's about to be a filing, so it sounds like he is going to buy eBay stock and then just let those shares be retired, let those shares be treated as if they are the same thing as GameStop owned shares. Sounds like that's more of what he's describing. Um, no matter what, the point is, hey, I'm doing something eBay's management would never do and has never done, But hey, an extra 500 million off of the 55 billion, not a huge, not a huge piece of the pie that we're talking about. But what is that? I mean, that's 1% basically of the purchase price, not quite 1% of the purchase price that Ryan Cohen's personally funding. Right? It's 1% of the value. There, Ryan Cohen saying, "Here you go." And if it ends up being a little bit more than half cash, half stock, like a little bit more stock, a little bit less cash, then again, that's it's even it's the the cash portion. It's like 2 or 3% of the cash portion that Cohen's going to be providing. Right? We'll see how the terms end up ultimately settling out, but as Cohen said, the composition could shift.
You've got a board that's making hundreds of thousands of dollars a year. They don't buy stock with their own money. They end up showing up to a handful of board meetings and they're making a fortune. You've got a management team that is grossly overpaid with taking zero risk. And why does everyone basically want this entrenched management team and board to stay like protected and to continue running the business and doesn't want, there's nothing more American than basically
Tell him, Cohen.
risking your own capital. So why does everyone want us to fail?
Commentators. What's your theory?
I don't know.
Have you sat down with their CEO?
Cohen is out for blood. He is coming. All of the negativity about GameStop. Look, that was cute in 2020 and justified in 2020. Guess what? It's not anymore. If you want to be on the right side of history, you start rooting for this guy, okay? That's what Ryan Cohen's saying.
I would love to.
He won't take the meeting?
I will fly to California tomorrow. No.
And I mean, you're the guy that's going to fire him. But he's going to get a payday, right?
A big payday.
A big payday.
And a
What's his
massive
parachute?
golden parachute.
Do you know what the parachute is for him?
It's over $100 million.
So he'll get $100 million to walk away.
Yeah.
Have you met with any of the board members?
No.
They won't take the meeting.
Nope.
Have you reached out?
Yeah.
The great thing about markets,
It's crazy.
they don't care what the media says. On the short term, they might. It's a voting machine, but on the long term, it's a weighing machine. And if the performance continues to be delivered at GameStop, people that might want to see the company fail are going to lose because you're going to get the way, right? That's ultimately what's going to matter more than anything here. But I would assume that at this point, seeing the results at GameStop, folks have to start paying attention that this isn't just a meme stock. I do think that the media, in order to give you credibility, and this would be my take on this, they're going to have to acknowledge that all of their takes on GameStop just being a meme stock were wrong. And that there is actually a business here, and that there is value being created here, and that they missed that, and they got the story completely wrong. And so to recognize that, and to recognize your competency as an executive and as a CEO and as someone that can run eBay better than the installed management, makes them wrong in their assessment of how the cards were all laid out on the table. That would be my theory about all this. Because everyone got caught up in the frenzy of the meme stock craze saying, hey, this is all just fake. It's not real. And everyone agreed with that. Once everyone agrees with it, no one's allowed to rewrite history. No one can ever say that they were wrong about COVID. You can't have everyone say that they were wrong about GameStop because it ruins their credibility. To maintain their credibility, they have to continue to make you seem less credible. That would be my take on it.
Yeah. Yep.
So your next steps, you're going to go hostile? You're going to do a tender? I mean, how's this going to go?
I'm going to do whatever we need to do, whatever I need to do in order to succeed.
But you're committed. Clearly.
Yeah.
If I'm their bankers, I get hired to run a process and maximize shareholder value. Those bankers then try and negotiate with you. But the truth is, if there's no other bidders, they're just negotiating against themselves. Is that fair to say? Like, are there other bidders that could emerge here that could beat this price that you're offering, that could beat this offer that you're putting on the table?
Well, it's a lot of money.
This is really interesting because, again, Cohen's talking about ultimately there's consensus with shareholders about Cohen's vision. The discrepancy is what's the equity versus cash split. The other piece of the negotiation is what's the price per share. And as it relates to those negotiations, how much leverage does Ryan Cohen have to say, no, it's half cash, half stock? Take it or leave it. We're the only ones paying. And no, it's 125 a share. Take it or leave it. No, like, does Ryan Cohen hold all the cards to these negotiations? And will he be able to get eBay at the terms proposed by GameStop off the cuff? How does Ryan Cohen view his relative strength in these negotiations? Let's hear what he says.
A big premium, and beauty is in the eye of the beholder. And like, it makes sense for me to pay this for the business because of what I could do with the business, not just short term in terms of increasing the earnings, but long term in terms of really taking significant market share in live commerce and building a digital marketplace for gaming. That's something an existing management team would never be able to build in their wildest dreams. And so it's worth it for me to do something like that. And then, obviously, when it comes to their large competitors, there's antitrust issues in terms of them being able to do a deal of this size as well. But I don't know why they won't speak to me. They should, because I'm not going to stop. I'm not going to go away. But I'm sure they're going to
another
make
option.
Yeah.
Yeah, I mean, people could come along and buy the shares on the open market too and vote in favor of your offer. So, I mean, this is what often happens in these sorts of situations historically is the shareholder base can turn over. And if people like the premium on the stock today and they don't want to own GameStop stock tomorrow, there's probably going to develop a good market for trading the shares if the market starts to believe your story, I would imagine, right? And so that might happen here as well. So look,
there's a lot of different escalation paths that we have in our toolkit.
Very interesting. So, as it relates to his competitive position within negotiations, Ryan Cohen basically said, look, no one else is going to pay this much for eBay. I will because I am the one that can deliver this value. So he views his competitive strength as pretty strong, right? And by the way, the other people that even could pay this much for eBay, they're not allowed to buy eBay due to antitrust. So how if you're an eBay shareholder do you really play hardball with the offer that GameStop has put forth? Right? There's really no one else bidding, is what Cohen's basically saying. And even if there was, there's no one else that would deliver nearly as much long-term value. So even if there was a company, say Etsy was like, hey, we're gonna go at it, or I don't know, I don't even know if Etsy would be approved, but Barnes and Noble. Barnes and Noble comes up with 56 billion. They say, "Hey, we'll pay you 66 billion." Right? Like, we'll pay you 10 billion more, take our offer. Well, if you're an eBay shareholder, what's in your best interest? Right? If it's an all cash deal, then okay, maybe you take the all cash deal of 66 billion from Barnes and Noble, but Barnes and Noble can't come up with 66 billion in cash, right? If it's an equity deal, like if we're just looking apples to apples on the composition, well, would you rather have Cohen starting the race 20% behind the starting line, or would you rather have Barnes and Noble starting at the starting line? Like, you'd probably still rather have Cohen, even if you got less money for it, right? 80% on the dollar valuation with Cohen at the helm, 10 years from now is a more valuable company than 100% of the valuation with someone not named Ryan Cohen, right? Ryan Cohen is the guy for the job, and GameStop is the company for the synergy, right? What's Barnes and Noble going to do with collectibles and live commerce? It's don't need it. Sorry for all those strays, Barnes and Noble. Um, all that to say, Cohen's competitive position, one, it's him. He's the guy to do it. Beauty is in the eye of the beholder, right? I'm the one that can extract the most value. Two, I'm the one that's willing to pay this much. No one else is even willing to pay this much. Three, even if they were, they won't even be allowed to, right? Because of antitrust, right? I am the purchaser for eBay, so let's go ahead and talk. And by the way, my my shareholder base within eBay shareholders is growing, right? People that like eBay but don't like me have already sold their shares and they're selling them more and more, right? The people that are buying eBay shares are the people that are preparing to vote for me, right? That want, and that's why they want equity exposure, right? Because they're buying the shares of eBay so that they can have exposure to GME plus eBay.
And we'll see them. Are you working with bankers or are you doing this alone?
Yeah, we're working with bankers and high priced advisors.
Okay. Well, look, Ryan, this has been awesome to get to know you and hear about your history
Of course, M&A, etc.
and your vision for where you want to take GameStop and eBay. Really, man, the best of luck to you in the process. And thanks for speaking with us.
I appreciate it. Great speaking to you, Dave.
Wow.
I'm going all in.
Let's go. Huge takeaways. Would love to hear about it in the comments. Anything that excited you the most from this interview that we just
Suppliers to get the
listened
best
to
product
together,
cost.
as well as any other insights that you would like to add to the equation. Again, just want to say thanks to those who have subscribed to the channel. Thanks to those who have joined the channel as fans and friends. All of the support is much appreciated and goes to DRS Book GME Shares. Let's see what happens, as Ryan Cohen has said multiple times, and I'm getting more and more excited about. Huge, huge takeaways. Woo! All right, that's all I got for you today. I will see you in the next one. Cheers.